Let's connect with Shankar Sharma now, the man who got the entire year 2012 right. He's got his call on China, Indian equities and crude right on the button. Shankar, so far it's been a 9 on 10 year for you. The only one you've not got it right is your call on rupee.
The call on the rupee, I mean, look, rupee is almost flat for the year. So compared to the kind of perspective, general consensus that existed at the beginning of the year, which was that it was going to go to maybe 57, 59, 60, 65, or at least it will depreciate sharply, forget about remaining flat. We have pulled back quite substantially from the lows that we saw in the middle of the year. We are almost flat for the year. So now if you put it in context of other global sort of emerging market currencies, let's say the Brazilian real or the Indonesian rupiah, rupiah is down 6.5% for the year. The real is down, I think, 8.5% for the year. The rupee is flat for the year, and I would still hold out the view that by the year end or say by January, we are going to see somewhere in the range of the 40s. It could be 47, could be 48, could be 45. But definitely the rupee definitely is going to sort of trade within sort of the sub 50 levels. So, there's still 2 months to go, and in this market, 2 months can be a lifetime.
Shankar, since you monitor politics as well as closely, the big news of the day has been the new expansion of UPA 2. What are your observations and how will the capital markets read into this exercise with the new ministries now having different heads?
Look, I've been of the clear view in the past 1.5 years that even while the media or sort of analysts and everybody, who knows 3 sentences of English, have been going crazy saying that the UPA is over, Congress is finished, and the BJP is sort of back in the sort of ascendancy, etc., etc. My view has been very simply this, that the Congress up to last year had a 7-year bull market from the time that they came back to power in 2004. So it's a 7-year bull market, you have to have a correction. What you witnessed in the last 1 year's time was a bull market correction for the Congress and a bear market rally for the BJP. We cannot over-intellectualize what was simply that after a long, strong bull run for the Congress, UPA could not do anything wrong. It had to have a pullback. It had a pullback, and the BJP, conversely being on the other side of the trade, had to look good at some point. It looked good for 12 months. I think that bull trade and bear trade is over. I think the UPA is back into the bull market mode. The markets clearly are telling us that this government is doing something right for India to have done so well on the FDI front, on the FII front, on the rupee front, on the overall stock market performance, overall revival, the green shoots of revival that we are seeing on the corporate numbers, on the economic front, on rural income growth. Hindustan Lever said that all the growth has come from rural India. So something has been done right here. It's not as if the government did everything wrong just because one Arvind Kejriwal came in and made allegations without any substance. Doesn't mean much. Those things happen. But the fact of the matter is that the Congress's, or let's say the UPA's bull market correction is over. Post the say so-called reforms of the FDI being liberalized, now this cabinet reshuffle, I think that bad phase is over. I think now you're going to see 12 months of very, very strong economic growth because the base effect will kick in now. Inflation, again, because of base effect, will look far more benign. RBI, I hope and I do pray that it will oblige. Stock markets look very, very robust. Industrial confidence is coming back. And compared to China, I mean, just look at the other side of the coin. Compared to China, where there is complete pessimism, I met somebody, a big industrialist from China 3 days back, and he said that I cannot believe the kind of optimism and the kind of buzz I see in India, the property market, the stock market. In China, both markets are down, way down. So all that is not happening because of pure magic. All that is happening because the government at the grassroots has been doing something right. So, I'm very enthused with whatever I've seen on the political front as well.
Shankar, but some are reading that Veerappa Moily now heading the oil ministry is going to be a positive sentiment impact in Reliance Industries. Even Jyotiraditya Scindia, a young minister like him at the power ministry's helm, would be positive on the sector. Can that be assumed, or do you think this is just jumping the gun?
I don't see how we are making the connection that Veerappa Moily's being in the oil and gas ministry is good for Reliance. I mean, I don't understand the connection. Maybe you know something I don't. But I think he's a very good man. He's done a good job in all the ministries he is occupied so far. And as long as he does the right thing, frankly, why should we care if it benefits company X or company Y? As long as the overall sort of oil and gas scenario looks better under his stewardship. But overall, I like him as a minister. So I think he's a good choice no matter where you put him. As far as Mr. Scindia is concerned, again, hopefully all these changes, bringing the younger people to the fore, etc. Look, again, India's demographics is obviously a very young demographic. The Congress understands that. The government understands that. It has good bench strength of young leaders, led by Rahul Gandhi. I think they're doing the right thing at the right time. And again, one of the other things on the political front that I have maintained is that, the BJP should have started all these sort of subterranean agitations through Baba Ramdev and through Anna Hazare, through Kejriwal, somewhere in 2013. They peaked too soon. In cricket or in sports, you shouldn't peak, around the quarter-final stage, or maybe even in the playoff stage. So I think they have given the government enough time to get their act together. The government has gotten its act together. And I think now for the next 12 months, 15 months, I don't see any slip up on the growth front, on the reforms front.
Okay. Shankar, let's talk stocks. Some stocks we've discussed, some stocks you've got it right. I want to start with JP Associates. You recommended this.
Why do you want to talk stocks? I mean, politics is far more interesting, Nikunj.
Because viewers will make money by listening to your recommendation. And some of them have made money. So I'm sure curiosity levels are high and you'll appreciate my curiosity. So my curiosity is, let's talk about JP Associates. You recommended that stock to our viewers at 55. It's at 90. Do you think that stock still has some more headroom left? Because you are a target of 120.
Yeah, we like it. We've liked it from the beginning of the year. Stock is, I think, up probably 90% for the year or thereabouts. We've liked, along with JP, we've liked some of the other infra names like Larsen & Toubro, IVRCL, etc. And all of them have generally done well. We haven't liked, of course, the GMRs and the HCCs of the world because, our view was you have to take a more nuanced stance on infrastructure. So we like particularly the bigger names because when you have sort of tougher access to financing, it's the larger names that get financing more easily. Larsen and JP are the two biggest names in that space. JP we like, we like the cement aspect of it. And, our view is that next year, in the coming year, 13-14, that will be the first year when they will turn in free cash, which is for an infrastructure company a big milestone. They haven't done so for the last 10 years. So they will see close to 1,300 crores of free cash in the coming year, which for a company with a reasonable amount of leverage, is a very, very important milestone to watch out for. So, in a nutshell, we like JP.
Shankar, you fleetingly were mentioning Unilever and how it's aided by, rural consumption actually going up. This time around, the earnings have shown a marginal volume downtake. Do you think that's a concern or is it just one-off? Is it something that the shareholders should worry about?
Well, when you have these valuations, you need to worry about these things. We downgraded levers about, I think, 3 or 4 months back. Stock from there actually went up quite a lot, I think about like 50-odd%. But our view was that it would be a hard act to keep following, even though I think Mr. Paranjpe is a terrific manager, probably the best manager Lever has seen in the last 15 years or so, from 97, 98. The good grassroots hands-on manager, the numbers speak for themselves. But it's a hard act to keep generating volume, particularly when you have an environment where sort of consumers tend to trade down because of the recession. I don't think the stock is going to blow out the lights from here on. I think it's headed for some degree of sort of market performance, if not outright underperformance. But on a pure, forget the market part of it, just as a business, just as a overall story, I think consumption in India is a no-brainer trade. So, that's okay. We will find laggards for a brief while in this entire FMCG pack. As a pack, I do firmly believe that 5 years out, there will be far larger companies than where they are today. I mean, India is hungry for consumption. These companies are supplying that.
The Shankar Sharma I know from last 10 years believes in two things: contra calls and big calls. So at the current juncture, what is your big contra call and what is your big call? I know your call on equities, I know your call on rupee, I need something new.
If you remember the last time I told you Apple has peaked out.
Well, that was a great call, but from India context.
Apple is the biggest call you can talk about, Nikunj, and if in your lifetime if you get just one call like Apple, right, I think you're more or less done. I don't have to keep talking to television every day to make a living. So that one looks shaky. They missed numbers, doesn't look good. But closer home, big call still remains that I don't see any other market competing with India. be on the macro front or be on the stock market front. I don't see any other country competing with India. Forget the stock market. Stock markets are only for the rich and the surplus people. I think as a nation, India is absolutely without peer. So if you put all that together, the big call is that India will dominate. It has dominated 2012 in terms of stock market performance. It will dominate 2013 as well in terms of stock market and macro performance. India's growth rates will overtake China's. That I'm pretty certain of. Maybe it does that in 6 months' time, or maybe it doesn't in the entire 2013. But China is headed down, India is headed up. At some point, the two lines will cross when India's growth rates will overtake that of China. That's a big call.
Technically, Shankar, is it time to buy PSU banks now, because some of the PSU banks have been thrashed down? And if you are of the view that the investment stroke capex economy will recover, PSU banks will be the first one to take off the block because they have high exposure to infrastructure. And if the capex cycle recovers, the NPA problems for some of these banks will be sorted out.
We have been very bullish on PSU banks, and actually they haven't been trashed that much, and they have been more or less market performers. Some of them, like Dena Bank, etc., have done phenomenally well. But on the more macro front, more than any revival in the capex cycle or the industrial cycle, I think the real reason to buy them is that our view is that bond yields in India are headed sharply lower. I wouldn't be surprised if in a year's time you got something like 7.2% on the 10-year yields. If that were to happen, you're looking at a huge sort of portfolio gain for these banks on their bond holdings, which we estimate to be something like 22,000 crores. And if you put that versus their real and projected NPAs, it more than comfortably sort of accounts for that, covers for that. So there is no real hit on the capital that you're going to see for these banks. And remember, I've said this again on your show previously, NPAs don't mean that the money that never comes back. These are all asset-backed transactions. The real estate on which these plants have been located, wherever the lending has been done for infrastructure or for a plant or power plant, whatever, those pieces of land have gone up for 4, 5, 10 times. So, it's not as if the money is never going to come back. It's an accounting thing to say they have become non-performing. So the money is not lost, but on the other hand, the bond side, the money made is going to be real. I think all told, I am extremely bullish on the PSU pack, and I would go as far as to say that if this market has to make a new high, which I think it will in the next few months' time, the big leader or big driver of that move is going to be the PSU pack. I don't see too many other large sectors which can take the market up 3,000 points from here. I think the PSU banks have to be bought.
Right. What about autos then? Is the dream run over for both two-wheelers as well as CV makers, or do you think the dwindling sales volumes is just an aberration and growth is still pretty much intact there?
Again, I've held the view that if you take a bird's eye view of India with its very low penetrations of auto ownership, be it passenger car ownership or be it two-wheeler, or let's say some variant of two-wheeler like scooters or whatever mobiles, it's still, if I'm not mistaken, passenger cars are like maybe 3% owned by Indians. By two-wheelers might be something like 14-15%, maybe 16%. When your mobile penetrations are 70% or 80%, there's no reason to believe that these numbers will remain in the mid-teens or even in the single digits. So if you again take a bird's eye long-term view of things, I think these numbers will go up 3-4 times in the next 10 years' time. So, and the players are not going to change dramatically. So all the players are there, they are well entrenched. So at the end of the day, I'm only going to take a bet that which player of these is going to do well. Our view has been very positive on Maruti. The stock has done very well. You would definitely want to bet on that. And on the two-wheeler side, you would definitely want to bet on Bajaj Auto, without any doubt. We have been very bullish on that versus Hero Honda. And now our bet was that it would really outshine Hero Honda dramatically post the breakup. And you can see the numbers are beginning to diverge already. So these two bets are absolute no-brainers without any doubt. Mahindra continues to look very good. Tata Motors struggles on the domestic front. JLR front is still good. So by and large, I don't think that the good days are over. I mean, it just is not going to be like a huge surge as we saw in 2008 to 2011 era. But that's okay. We will still, make money buying these stocks from a 2 or 3 year perspective.
So do you think the springtime in Tata Motors is over? Because the business which so far has differentiated Tata Motors is JLR, and JLR seems to be slowing down. Last time you told me that you don't like the new car designs.
I like the car designs. I don't like the SUV designs. I've never liked them, in fact. Look, I don't think JLR is a fully sort of exploited story. I mean, I don't think that story is over. It's still a very small percentage of global luxury market. I think there is a lot of scope out there to ramp up distribution. I think they're just doing that in India. They're doing that in China. They will go into other markets in Asia. You know, even if you talk about the US, I think the distribution again needs to be beefed up. So there are still large markets out there where JLR still can get a lot done. And when you put that in along with the cost reductions that they are definitely going to achieve by way of you know, outsourcing to China and India, you know, you're going to talk about a pretty significant margin, at least maintenance, if not outright growth, and volumes will come. So I'm not saying that JLR is a done deal and there's no further growth to be expected there. It's simply that, you know, stock that is done so well can go sideways for a while. I think that's really where it is. But we shouldn't read too much into just the Tata Motors has been 270 for the last 4 months.
Shankar, you've liked TCS in the past, and TCS has been a great performing stock so far this year. But if I currently look at TCS and the market cap of TCS, it is higher than Infosys, HCL Tech and Wipro put together. Do you think TCS deserves this kind of a market cap?
I don't know. I really don't have a straight answer to that. All I can tell you is that you know, IT has seen better days. So you know, our general view has been that you're not going to blow out the lights buying IT stocks. And if you also factor in that the rupee doesn't look weak, looks strong, then the added reason to hold IT stocks is not there. But within that context, you know, I think everybody you know, on the street sort of has bet on HCL Tech and on TCS, and they have been right. So I don't have great intellectual value to add to those basic trades. But overall, you know, we are very ambivalent or even lukewarm on that sector. I don't think there's big money to be made there.
Shankar, I don't know if you track this one, but what's the call on the UB group of stocks, United Spirits as well as breweries, now that Mallya has said that he may not really sell a stake in USL in a hurry? Would you have a call on this one?
We have liked USL. We've had a buy on it for the last 4 or 5 months, and the stock is up like, I think, 60% from when we liked it. So yeah, we've liked the trade, we've liked the stock. We've liked Kingfisher Airlines as an airline, you know, not as a stock, but I've loved it as an airline. Unfortunately, it's not there anymore. I think Mallya says a lot of things, but at the end of the day, you know, he has to figure out what's to be done on United Spirits. It's not an easy deal to achieve. Hang on. What's that? Can you hear me?
Yep,
yes.
Go ahead.
Can you hear me?
Yeah, go ahead.
Okay. Sorry, this thing keeps springing out. Yeah. So, you know, he has to figure out a way to monetize whatever his holdings are in United Spirits to inject funds into KFA. I don't see how he can say the things he said in the media, saying that I don't need to sell anything in order to fund KFA. I don't see how he can achieve that. So I think that's just a lot of posturing. I think he will ultimately need to do a deal on Diageo, on the Diageo front. But that's not an easy deal to achieve. I do believe there are a lot of stumbling blocks in the deal, a lot of things to be ironed out. I'm hopeful that something will get done. But you know, the fact of the matter is that we would continue to like United Spirits even without the Diageo deal happening.
But Shankar, you know, the point to ponder about, and really critics have been wondering, that should Mallya go ahead and sell a cash generator for a cash guzzler? Is that the right thing to do?
That's classical investing. We always sell our winners and we keep our losers. You know, so I don't think Mallya is any different from all 99% of the fund managers in the business. So you know, that's the way human beings are. That we say, okay, I'm making money in this trade, so let's sell this one, and I'm losing money on this one, so let's hold on to this one. So that's exactly the way he's approaching it. I mean, I wouldn't have touched the airline business with a barge pole, but I'm not Mallya, and thank God I'm not Mallya.
Final question. I just noticed some more grey hair on your mustache and on your hair. So is this age, wealth, wisdom?
Wisdom.
Age. Yeah, age.
Not the wealth effect?
No wealth effect at all. I mean, it's been a hard market to make money in, boss.
Come on, you've got your predictions right. So what are you buying in your personal portfolio?
I don't have a personal portfolio. I told you I don't do personal portfolio anymore. I'm retired.
Well, that's sign of success, Shankar. our sign of satisfaction. Appreciate your time and thank you for joining us on ET Now.